Welcome to our video discussing William O'Neill's book, How to Make Money in Stocks, published in 2009 after the financial crisis. Despite its timing, the book has sold 2 million copies. O'Neill's research on the best-performing stocks over the last 125 years forms the foundation of his investing approach, which contrasts traditional advice by emphasizing market timing, trading, and stock chart interpretation. Let's dive into the key takeaways. O'Neill's Slim strategy is a powerful tool for stock selection. Here's what it stands for. C. Current quarterly earnings and sales. Focus on stocks showing a significant increase in quarterly earnings per share compared to the same quarter last year. Winning stocks typically have an average increase of 70%. A. Annual earnings increases. Look for stocks with at least 25% average annual earnings growth over the last 3 years. N. New products, management, or conditions. Stocks with innovative products, new leadership, or industry changes are likely to perform well. S. Supply and demand. Choose companies that reduce their stock supply through buybacks and have strong management ownership. L. Leader or laggard. Invest in the top companies within strong industry groups. I. Institutional sponsorship. Favor stocks with increasing institutional ownership, especially from top-performing asset managers. M. Market direction. Understand whether the market is bullish or bearish to align your investment strategy accordingly. Knowing the market's direction is crucial. Here's how to gauge market trends. Use market indices like the S&P Global 1200, Nasdaq Composite, and OMX Stockholm PI. Identify bull markets by strong closing prices and bear markets by weak closing prices. Watch for distribution days and follow-through days to signal market shifts. Recognizing strong base patterns can lead to profitable trades. Look for price and volume patterns. Patterns like the cup with handle indicate a strong base. Cup with handle. The cup should last 7 to 65 weeks with a decline of 12 to 30%, forming a U shape. Handle formation. The handle should form in the upper half of the cup, not fall below the 10-week moving average, and last more than 2 weeks. Pivot point. Buy at the pivot point where the handle's downtrend breaks with a significant volume increase. Having a disciplined approach to selling is just as important as buying. Follow these guidelines, limit losses, always sell if a stock drops 7 to 8% below your purchase price. Recognize sell signals. Look for signs of distribution, stock splits, poor relative strength, and other indicators. Realize gains. Develop a system for realizing gains based on specific criteria. By applying the Slim criteria, understanding market direction, recognizing strong base patterns, and having a disciplined approach to selling, you can make informed and profitable decisions in the stock market. O'Neill's strategies offer valuable insights for any investor looking to succeed. Thanks for watching, and happy investing!